Hey everyone, and welcome to this explainer. Today, we're unpacking a really fascinating paradox. While ultra-high net worth individuals might occasionally rent to, say, test out a new city, they almost always eventually choose to buy. But why? Well, we're going to break down the highly specific financial and lifestyle strategies driving this exact behavior. We'll see exactly what we can learn from how the world's wealthiest manage their money. Let's get into it.
Okay, let's dive into this. Here is our roadmap for today. We'll cover the wealth preservation strategy, diversifying beyond the market, the ultimate luxury, privacy, global mobility and strategic hubs, and finally, multi-generational living and legacy.
So, this really begs a fascinating question. Think about it. If you could afford to rent a penthouse absolutely anywhere in the world, why would you ever tie yourself down and buy one? Renting seems to offer the ultimate freedom, right? You can just pick up and leave for a new city whenever you want, no strings attached. Yet billionaires consistently choose to anchor themselves with massive, high-maintenance properties.
When we look at a direct comparison, the reality starts to reveal itself. Yes, renting offers agility, flexibility, and zero maintenance. But for the ultra-wealthy, buying offers something far more valuable in the long run. We're talking wealth preservation, an inflation hedge, and complete control over their environment. For them, a property is way less about just having a place to sleep and much more about securing a long-term asset.
Section 1. The Wealth Preservation Strategy, Hedging Against Inflation. So, with U.S. inflation historically hovering right around that 3% mark, high-end property actually acts as a critical economic hedge. Why is that? Well, because real estate values typically rise right alongside inflation. Instead of just letting cash sit in an account, literally losing its purchasing power year after year, wealthy individuals intentionally park their capital in premium bricks and mortar to preserve its value.
And, they aren't exactly buying modest homes to pull this off. We're seeing record-breaking demand globally. Just look at these staggering figures for a second. An $87.5 million penthouse in Manhattan and a $54.5 million penthouse in Abu Dhabi. Elite buyers are using these massive, tangible purchases to safely store and protect their wealth during global economic shifts. It's like a giant financial fortress.
Let's move to Section 2 and see how this builds. Diversifying beyond the market, the portfolio approach.
Now, here is a heavy-hitting statistic for you. Globally, only 51% of home buyers in the luxury sector actually purchased property as their primary residence. Think about that for a second. That means nearly half of all these massive purchases are for second, third, or even fourth homes. Affluent buyers simply don't think in terms of a single home. They think in terms of property portfolios.
When billionaires diversify, they are looking across multiple asset classes. You've got stocks, equities, and private businesses, which are great for growth, sure, but they can be highly cyclical and volatile. So to balance that risk, wealthy investors add tangible, low-risk assets to the mix. Things like luxury real estate, fine art, and jewelry. Real estate provides a solid physical anchor when those financial markets start getting choppy.
To manage all of this, the ultra-wealthy utilize what are called family offices. Basically, these are dedicated private wealth management advisory firms. They handle complex asset structures and legacy planning. And the fascinating part here is that they apply the exact same intense operational discretion to a property purchase as they would to a major corporate acquisition. It's all strictly business.
Moving on to Section 3, the ultimate luxury, privacy, security, and wellness integration.
At the absolute highest levels of wealth, exclusivity is no longer about public visibility, it's entirely about intentional privacy. Today's high-profile buyers want deep, deep security. They're looking for gated estates, backup power generators. Actually, get this, they even conduct intense pre-purchase security audits where experts fly in to determine extraction strategies in case of emergencies. No way, right? It is all about creating a strictly invitation-only environment.
Now, what's really interesting about this slide is the incredible rise of branded residences. These are premium homes tied directly to luxury hotel brands. They offer exclusive hotel-style amenities, advanced wellness facilities, and fully staffed in-home spas. It represents a massive shift toward combining the total privacy of home ownership with the absolute peak experiences of world-class hospitality.
And the demand for wellness, it's undeniable. Interest in green, master-planned villa communities is exceptionally high right now. In fact, our sources indicate that 88% of wealthy buyers now consider access to parks and greenery a total must-have.
They are valuing long-term quality of life, mental well-being, and eco-conscious districts just as much as they value capital appreciation.
Section 4. Global Mobility and Strategic Hubs, a Unified Landscape.
You have to remember, these buyers are completely unconstrained by geography. Whether it's a stunning clifftop home overlooking the sea in New Zealand or a striking estate in Pescadero, California, affluent buyers are building their portfolios across completely diverse, premium global locations. And they tailor these locations entirely to their shifting lifestyle, business, or educational needs.
And this brilliantly illustrates how, because of this mobility, certain locations naturally emerge as ultimate strategic bases. Dubai, for instance, has firmly established itself as a premier global hub. It's a place where international capital and luxury lifestyle merge perfectly, allowing individuals to operate globally with just incredible efficiency.
The strategic advantages driving this migration to the UAE are pretty clear when you look at the facts. They offer zero personal income and capital gains tax, Golden Visa long-term residency programs, deep connectivity like a 7-hour flight to London, and double taxation treaties with over 138 countries. Add in elite healthcare and global schools, and you've got an absolute magnet for global wealth.
Section 5. Multi-generational living and legacy, the family anchor.
An expansive waterfront estate like this is the perfect setting to bring an entire family together under one roof. And what's super fascinating from our data is that 19% of millennials are actually engaging in this trend right now. Wealthy families are securing massive properties to deepen emotional connections and share caregiving responsibilities across multiple generations.
Ultimately, real estate is an incredibly effective tool for long-term estate planning. It allows these individuals to organically transfer wealth over their lifetimes by building a legacy home for their heirs. These purchases aren't just for show. They are highly strategic investments that hit multiple financial objectives, all while creating a safe, thriving space for the family to enjoy for decades to come.
So the crucial point here isn't that everyone should immediately stop renting. I mean, renting can make perfect financial sense depending on your goals and your mobility, but the key takeaway from the ultra-wealthy is their mindset. They prioritize long-term value, quality locations, and portfolio diversification. While the ultra-wealthy certainly operate on a totally different scale, prioritizing long-term asset growth over short-term expenses is a powerful, universally applicable mindset for all of us.
Which brings us to our final thought to leave you with today. Whether you are renting or buying in today's market, what is your personal strategy for long-term value? I really hope this explainer has given you some sharp insights to help you reflect on your own financial horizon. Thank you so much for joining us. Keep learning, and we'll see you next time.